Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Wednesday, December 25th, 2013. As we approach the end of the year, S&P futures have broken out above the prior multi-year high at 1812, and as of Tuesday's close, auctioned up to a new high at 1829. The recent leg of the rally began following the FOMC announcement, when the S&P sold down to 1760 and then auctioned up through the previous trading range. The Follow the Bots computational model forecasted that the S&P was likely to rally into the end of the year based upon the seasonal factor, the continued accommodative monetary policy despite the so-called modest soft tapering, along with the improvement in economic conditions. Last Friday, after pulling back modestly to 1802, S&P futures broke out above the prior high at 1812. The rally continued during Sunday's Globex session, with the S&P trading up initially to 1824 and continued with the S&P extending the trading range above the prior multi-year high, the distance of an average daily range, or 17 points. Since the last minor pullback level at 1795, S&P futures were up 34 points at the close of Friday's session. In the context of the breakout above the prior multi-year high, the maximum likelihood expectation target is located at or near 1833-1835. The extreme price excursion level is located up at 1845. For a more detailed review of the recent market developments, we'll turn our analysis to the 5-tick range chart. Here we see the S&P after it gapped above Friday's close and initially auctioned up to 1824. During the initial run to the 1824 price level, the order flow events indicated that buying interest was waning. In other words, the computerized trading programs, the bots, ceased executing to the buy side. S&P futures made a modest pullback and traded down to 1818. Following the sell-off to 1818, the computerized sell programs ceased executing, and the S&P auctioned back to retest the high at 1824. The S&P traded in a very narrow range overnight, pulling back modestly to the 1820 price level before attempting to retest the high at 1824. Prior to the U.S. Open, initiated buying activity appeared as the S&P auctioned up above 1821 on its path to retest Monday's high. As the S&P approached Monday's high, initiated buying accompanied the initial retracement up to 1824, and as the S&P broke out above the previous minor resistance level at Monday's high, high-frequency initiated buying accompanied the price action as the S&P traded up to 1829. The slope of the digital filters, the Kalman filter, and the Gaussian filter remained exponentially ascending during the breakout. As the S&P auctioned up to 1824, statistical high volume accompanied the retest. The volume at price data indicates some 15,000 contracts traded at the 1824 price level. Statistical high volume was also present up at the 1827 price level. As the S&P has rallied up to its new record high, there are several support levels that accompanied the rally. Minor support can be said to exist down at the 1718 price level and at the 1812 price level. The volume when the S&P auctioned up to the previous high indicates there are trapped sellers at or near the 1812 price area, and similarly there is high volume selling at the 1815 close. In the current context, near-term support is located down at the 1802-1800 price area. Should the rally continue at the open of Thursday's session and high-frequency buying continue to execute at the high, we would expect to see the market auction up at or near 1833, 1835. Once again, we would like to point out that there has yet to be a sell response to the market as it has auctioned up to new multi-year highs, and there has not been a pullback as of yet equal to an average daily range. The Follow the Bots computational model forecasts the likelihood of a daily range pullback, particularly in the context of the rally continuing up to the 1833 1835 price level. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.